what is the December performance and what is the January projection. So this is what we are planning today, and we will look at the charts as well as the projections probably for the month of January. This has been a very unprecedented year in terms of market performance. Last year it was around 12,200 close, and this time if you see the close is now 13,980. So approximately we have got a 1,700 points, which is approximately a 14 to 15% gain. So this has been the gain of index Nifty, but from the low to top, this has been around 6,500 points, 7,500 to 14,000. We had a crushing fall in February, March, and then a dizzying rally, which has taken the market back to the previous peak and crossed the previous peak very easily. And within 2-3 months, we have seen a huge rally of almost more than 25%, even when compared to September close. September close was 10,800 approximately, and 3,000 points were added within 3 months. It's more than around 23-24% gain since then. So it has been a breathtaking rally in the last 3 months. The rally got accelerated further, and probably there are various reasons, and the data set which comes probably in coming months and the GDP growth will need to substantiate this particular rally. The biggest lesson that we have all learned is that whatever the crisis, whether it was during the Lehman period or whether right now, if the central banks act fast and the government adds stimulus measures, I think it neutralizes even a tragic effect of a great pandemic. That is the lesson. Second thing is, I think investors who stayed calm have made money, and traders who over-leveraged have lost money. So this is the pain in the market as well as the pleasure in the market. So it is up to us to decide what type of return that we want and what type of leveraging that we would like to do in the market. So this is the lesson that with which we need to look forward for the coming year of 2021. So right now this rally is also sucked in so many traders into the market, and a lot of IPOs have come, and most of the IPOs have fared exceedingly well, which itself is a matter of concern because at the market top only such IPOs come. Third thing is valuation levels are quite stiff, which means that at any point of time there can be a correction, and if a small negative trigger comes, then probably market could have some sort of a correction of at least 10%. Having said that, I think any correction is also an important thing to buy, because there is a chance that the market will go beyond 15,000 in coming year. And we will look at the annual performance and quarterly projections and all in coming week. And today we will just stick to the topic of what is the December performance and what is the January projection. Particularly first we will start with Nifty. Now Nifty, the low this month was 12,900, approximately started around that place, and the high was today's high of 14,023, and it closed at 13,982. So this is a very significant thing. So almost we have seen 1,000 points rally further in this particular month, which is almost a 10% rally compared to the previous or a 9% approximately rally compared to the last month. And so what does it tell us? That whether we were able to project this particular rally coming with respect to the November month. I think with respect to November month, which also a mind-blowing rally, we had projected the market can easily scale 13,600. That time the market closed around 12,900 levels. We had projected that 13,600 is definitely possible, and beyond 13,600 we could see some resistance coming closer to 13,800. And it happened. 13,800 was the resistance. It got pushed down to 13,145, and from there the rally again took it forward to the present level of 14,023. So what does this particular rally, the data set at least tells us, is that when we have profiled that if such a thing comes, then what is it that we can expect? What is the probability of certain levels happening? Now this has been this formula, about the pivot point formula, and based on the pivot point formula, we expect that the resistance R1, which is around 14,368 precisely, probably in January. Okay, so this is now market is 13,982. So this is a possibility of market, really at least going up to 14,368. A very high chance of it going up to 14,368. The second level is 14,750, which is approximately a 5% further 5% gain from here, and which is also a possibility now. But it's not easy to keep on extrapolating such rallies, so there can always be a fall. Now, markets can get a little bit nervous just before the budget, because budget is coming on February 1st, and so this will be the last expiry before the budget. And we have heard that this budget could be a breathtaking and path-picking budget, because the FM has said that this is a budget which you would not have seen for 50 years. So that has kindled some sort of optimism. But nevertheless, we know that the government sometimes, the whatever said may or may not happen due to some constraints, and because of that there can always be disappointment following the budget presentation, which probably could trigger some correction. That's also possible. Or there could be some correction before the market budget is presented, and if the budget is really liked by the market or the market players, then probably we can see another significant rally to unfold in the coming year. So based on that, I think if there is a fall, I think the chances of it going down below this particular level also is not very high. So I think we should expect the first support to come closer to 13,635, and then 13,248 or 250, or it could be somewhere in between also. There is PP and S1, so it could be 13,400, 434 levels also is possible, and after that probably there could be some sort of a reaction back bounce. Another important point that we must always note, that if at all there is a fall to a big fall like what happened this period 13,140, from there you can easily see within a month, these days it's happening, from that particular low you can easily see a 10% rally from that particular low within a month. This is what we have been observing in recent periods, if that is a real low. Okay, so that means another 1,300 points if it is added to that, so we should get 14,350, 40 levels probably even before mid-January, because this fall happened doing 21st of December. So probably by 20th of January or so, there is a chance that you can get 14,368. But going by what's happening, it looks as if it's a 3-4 days performance to get that. But let's not keep on extrapolating. And the reason why I'm cautioning you is that what we are seeing, for which we will have a session on Monday, we are now seeing some sort of a oscillator divergence. When we say oscillator divergence, we are talking about the price going up, but the momentum which is measured by the oscillator probably is not going up. So this is a cost of possible indication of bearishness to come, and if such a thing happens, then you can easily see a market correction of 10% happening. At 10%, assuming it happens somewhere from 14,000 plus something happens, chances that it could be closer to 12,600 to 12,800 levels. So that's a clear possibility. That is, let's not rule out that, because I'll just show you two important moving averages also, probably to which the market probably can head towards. So we will draw the 20 and 50 moving average right now. So we are using this in investing.com site. So let's look at the 20 moving average right now. So this is the 20 moving average, and I will also look at the 50 moving average. So this is the 50 moving average. This is all on a monthly chart. So now we will go to look at the daily chart. So this, if you see, most of the time, no, in this particular rally which happened from March and April period, there has been only one period where the market fell below the 50 moving average. That was this fall. That was this particular fall, no, of 10%. That is happened from 11,800. It happened to 11,015. So this is the fall that we are speaking, which is the 50 moving average, slightly below the 50 moving average. And similarly, we saw some sort of a fall here, which from here to this place. So probably, if you look at the trend line also connecting this, so this is going to be a major place of support. If at all there is going to be a fall, which is slightly below the 50, but okay, so this is all coming at 12,200 or so. So I think that could be a very major correction if it happens. But right now we will look at the corrections which are taking place here. Okay, so now this particular area, this particular 20 moving average is the important support, because we have seen first the 20 moving average itself can give support. So we need a clear close, which is 13,550 or so. Right now it's coming closer to 13,550 and probably could adjust little higher in days to come. So 13,600, 635 is the pivot point which we saw. So that probably could be the first support. So any fall which is below that particular level, now in this month 13,240 to 13,250 is S1, and generally speaking, I think getting it much below 13,250, I think it's a very unlikely scenario, because we have seen in the last 4 years or so, 2017 to 18, 19, 20, this particular, so this 4 years, slightly even more than that, in this 48 months, there have been only 2-3 months when the market has fallen more than 800 points from the previous month low, which is the previous month close. Now this close is approximately 14,000. So getting it below 13,200, below S1, I think needs a lot of negative developments to take place. So 13,200, I think, is going to be 13,250, which you are speaking S1. I think is the support which this time the market will hold on any correction. One. Second thing that we have seen always, the market, if you look at it, first of all, it has a correction which is approximately 5 to 5.5%. This is the first stage of correction. Then the second stage of correction is approximately 9 to 10%. So this is these are all the important aspects which we must know. And the third aspect, third correction could probably take it back to something like 15.5% or so, 15.5 to 16%. And getting it much below 20% takes place once in a decade or twice a decade. So I think we will leave it there. So this 5.5% correction, if at all the market is going to fall, is approximately 700 points, 700, 750 points from the peak of 14,025. If at all the market is going to fall from this level, which means it is at 13,250. So 13,250 is something which probably I think we should be looking towards as a very important place of support. 13,250 is going to be a very important place of support. So the market probably is a buy on dip. And so what are the places that it's to be bought on dips? Because the first thing is the first important levels that you should watch for is 13,860. If the market is going to fall below 13,860 or 800, I think this is the first important support level. So this is the area which you have to watch right now, and this should be the tight stop loss for those who are now trading in the futures, because you need to get out fast, get in and get out fast. So this is going to be the first level. Then the second level of support that important is going to come closer to 13,600 to 550, right? So that is what we have seen in the 20 moving average right now. Only if it is going to break below this, then in that case we could see probably a 13,250 or so. 13,250 or so. And why 13,250 can be a very important level is, suppose if you look at this particular, this one, that is from this particular level, which is the 100 moving average. If you look at the Fibonacci ratios, let's look at the Fibonacci ratios for this. So approximately now if you look at this, okay, we'll put it here. So this comes to 13,270, right? So this is what we are speaking about, 13,270. So if the market trades a little lower, I think the it could be at 13,270 levels. Can be the first important level of support. Can be first important level of support. Breaking below which could be at 12,800 levels. I think that is a place where probably we can see the market hold, because that is where the 50 moving average is also coming. And hopefully, that possibility exists mainly because we have drawn RSI here. If you look at this is a relative strength index, for which we are going to give some detailed explanation on Monday. But just for the time being, if you look at it, the relative strength index right now is making a bearish divergence. See this place, you have seen the price high here. Next high has come here, okay. But if you see today, it's a high which is above this particular high. But if you see the RSI, this is below the last important high, which means there is a divergence right now. And this particular divergence, if at all happens, if the market is going to fall during such periods of divergence, then the correction is around 9 to 10%. So if you look at that same percentage, then it could probably at least head towards 12,800 levels, which is the 50 moving average. That is what we are talking as a very important level to watch for. So please watch out for this particular level, the divergence, and so give importance for that. And so the best thing is to just put a 13,800 or 13,775 or the last important close that came was 13,760 or 750. So this price of 13,000, I would say 800, okay, approximately around that particular level, 13,750 to 800 levels, the importance for a stop loss. And if it falls down, then in that case it can fall down by another 500 points. Close to 13,250, that can be an important support, and the failure below that could be 12,800 levels. So those who are looking for investment, just wait. There can always be a correction of 4-5%. And if this is going to be the high, the first area of support that you need to buy closes 13,250, and second level of important support from where you can really go long is around the 12,800 levels. So these are the two important places that offer as and when it comes. Whether it will come this month itself will depend on developments. But correction is always a big possibility because of the RSI divergence, and that divergence is right now is taking a very firm hold, and the correction and the rally has also gone up very significantly. So we should be really bothered in case if a 13,700 750 is cut. So please keep that particular thing as a stop loss for a moment towards on the downside, where probably you can pick it up around 13,250, 300 levels also. Because right now the 20 moving average is moving closer to this particular place, it's 13,550 or 590, and can move at a slightly faster pace. And for a couple of days, if the market stagnates at some level, this itself can move right up to 13,700, 750 within a couple of days. Because every day right now we are seeing a big acceleration in the 20 moving average, because the one day 13,594, and the previous day it was 13,550. It's moving at the rate of 50 rupees per day. So probably getting it closer to 13,750 will be matter of 3-4 days. So next week closer to 13,700, 750 can be seen in 20 moving average, and a break below that probably could be a place which could probably could be a trigger for a bigger fall. So please keep that in mind, that particular situation, and safeguard your trading positions. Investors need to wait at least for a fall, which could be probably, I would say, closer to the 50 moving average. On a bigger scale, I would say, which we will come to it again for analysis a little later. I think right now, we will look at this place. This trend line. Okay. This place, and right now next month, if it comes a little lower, it should be the same which I told you, 12,700, 12,625 to 12. That is what we have been saying, that 12,650, 12,800 levels can be a very, very important support. So the market probably can hold around that particular level. So what we are expecting is some sort of a fall, which we cannot rule it out, closer to 12,800 at some stage. It's really a good place to go for investment, because that means we have also said that every December, now this is out of 10 years, 8 years the market is closed in a positive, plus or minus 2-3%, you leave it there. Now, except for 2 years, 1 year there was a fall of 2-3% compared to the previous December close, and only in 1 year there was a fall of more than 25%. And since this year already a big fall has taken place, we don't expect a 25% fall in all the market. So if you get around 12,800 levels, it itself means 1,200 points, which is 10%, approximately 8 to 10%. From there, if the market is to climb back above the 14,000 levels, then for this year the return would have been more than 15% for this year, right? So I would suggest that you wait, and on any fall towards a 10% fall, to take the market, definitely it will go up. So for the next year projection and all, we will come to it later on. So this month, let's expect 13,000. The first support, be careful below 13,750 or so. The fall can take you closer to 13,250, and further thing, it could be towards the 12,800 levels, which is a good point. But based on the pivot point projection, 12,800 is a slightly remote chance. The important support probably will emerge towards the S1 level, which is 13,250 levels. So much below that is not a very likely scenario. But if at all, if you buy around 13,250 or so, and then if it comes to 12,800, I think it's it's something to be averaged out, both for investment and as well as for trading position is concerned. The long traders, please keep a tight stop loss closer to 13,750 or so. Okay. If the market is going to rally further, then getting closer to 14,350 is going to be a first major resistance, and only above 14,350 we will see a further rally coming forth. So let's play for a first 13,750 to 14,350. If 13,750 is broken, we should look towards a 13,250. So this is the place where we should look at it. Now you look at the bank Nifty right now. Okay. So bank Nifty also. Now let's look at the big picture, whether, see, Nifty has crossed the previous peak very significantly, but Bank Nifty has still failed. Bank Nifty has still not climbed above the previous peak of last year. So Bank Nifty definitely has underperformed this year when compared to Nifty. So which means very clearly that this time it has been Nifty and IT sector. Okay, so both have really done well. And here also, if you look at it, even in a monthly time frame, of course, this is we look at the daily time frame for the. So you look at the daily time frame, and the divergences are there. There was one compared to this was a divergence. So we saw a fall, and right now also the rally is taking place, but you see a considerable amount of divergence. Again, the RSI divergence is taking place. This is not a very comfortable place, to keep on, going for the long side. So we should be looking at some sort of first support, which probably could be coming so closer to this. Now we'll look at the. So this trend line. So somewhere around this particular line, I think, we may get, so this was the low. So next time if the market is going to fall, I think, we should have a strong support, which could be closer to this particular high, which is 29,920. So 29,920 is the place where we should look towards, an important support. So Bank Nifty. Bank Nifty, the important support can come closer to 29,920. So watch out for this place. For anybody who is having a long position, this place is going to be very important. 29,920 is going to be a very important place to watch, and a fall below this could probably take it much lower towards the 28,220, 28,340 levels or so. Further fall of 1,400, 1,500 points cannot be ruled out, because the Bank Nifty, if you see, there is always a chance that it can fall easily by 10%. If Nifty falls by 5% or 6%, then Bank Nifty can easily fall by 10%. And last time also, if you look at it, it was fall from 31,000 to 28,976. It's just 29,000, so 2,000 points, which is approximately a 7%, 7 to 7.5%. So we could expect a fall which could be even up to 10% in Bank Nifty. And so this right now it's 31,510, and a 10% fall, it is around 3,000 points, which could be at 28,000 levels. 28,000 levels is possible, and that is what the 50 moving average is coming to. So a possibility up to this is something which cannot be ruled out as far as Bank Nifty is concerned. If you look at let us look at the monthly chart in Bank Nifty, and this month is relatively, if you see, is I would say is a small range compared to what happened last month. Okay, so this month, if you see, it was 31,492, 28,993, and 31,264. So let's look at the same pivot point, 31,492. High, low 28,983, 31,642, which is the close. Okay, sorry, not 31,642. It's 31,264. Very closer to the high. So based on the pivot point formula, what we have is 31,492 to 3. 30,579. So this could be the first support which could happen in this approximate support, and S1 is going to be 29,667. This is what we said. Be careful about 29,900. So possibility is that we could get support closer to this. Okay, so this is a very important level of support, and a failure below this is what is going to instigate a further trigger, a further fall. So up to this could be a buy for this month, and R1 is going to be minus 28,983, 32,175. So I think we should look towards playing this particular level, this play and this place. So it could be a 29,900 to 32,175 is the first range that we should look forward. Otherwise, we should look towards R2 on the upside. So S1 to R2, if you look at it, it is going to be the difference last month was 31,492 minus 28,983, which is 2,509, and let's add to 30,579. It is 33,088. So R2 is 33,088. So mostly it may not go much above this. So the close is around 31,264. Possibility that it can edge right up to 33,000. Okay, and on any fall it could be 29,670. So we can look towards a range which is between 29,900 and 33,000. So this is a range which can be expected with respect to what happened in December. December month has been good, and it has been tracking almost, the gains have been tracking the Nifty, and Bank Nifty constitutes something like bank stocks constitute almost 35% of Nifty index weightage. So when the banks rally, the Nifty also rallies, And so to that extent, the rally in Nifty is also contributed along with IT by the bank. So one way to look at it is the banking sector along with Nifty can do well. But Nifty being more diversified, the risk can be taken very clearly in Nifty compared to Bank Nifty, because if you have seen the Nifty compared to last December, what has been the performance? Now Nifty has rallied 15%, right? But what is the Bank Nifty? Last December, if you look at it, it was 32,161. It has not come even up to that. So there is still a loss compared to last December for Nifty, for Bank Nifty. So Bank Nifty has not done well at all compared to last year. So it is a laggard, which means that if there is a fall in Nifty, there can be a greater fall in Bank Nifty, okay, or vice versa you can keep. So I think right now we should be looking towards support which could come very close. There is a big support which is 28,820. So we don't see the reason why the Bank Nifty should fall below 28,820. So to that extent, there can be a movement which is up to 28,820. And let's look at the Fibonacci here from this level to this level right now. And if you see the Bank Nifty, the first 23.5% comes closer to the same 28,850 levels. And the 38.2% comes at 27,233. So at 27,233 at some stage is not something which can be ruled out if there is a bigger fall. But after that the market will rally. So I think the first scenario that we should we should keep is that there can be a fall if this is a top. There can be a fall which could be up to 28,850 or 27,233. From there, again a new peak can come, which will be a climax for Bank Nifty before it starts falling. Okay. Now, let us see whether there can be within that thing. Let's look at. See, from this place, I think if you see this, we have to go to the hourly chart to look at some wave formation, and from this particular fall in the hourly chart, if you see, there has been a divergence in right now, which is taking place in RSI indication. Now, RSI indicator is definitely showing divergence. Okay. So right now, if there is a fall which is below this particular low which came today, I think you need to ensure that your long positions are protected below 31,000 itself, 31,010. I think for those who are looking at for early exit, 31,010. I think this should be, because right now the market closed at 31,264. If there can be a fall below 31,010, it can probably drag the index quite low. Bank Nifty can come down easily to this place or even much lower. I think we should be quite careful, because if you see the Bank Nifty, I think the RSI divergence in the hourly chart is there. Our hourly divergence chart we have seen in the daily chart also right now. So all these things points to a probable chance of a bigger correction that can take place right up to 10% also, 10%. So a fall which is closer to the 50 moving average, which is 28,845, 850 is a possibility. And we have seen that also in the past. If you look at the past performance, also whenever there was a RSI divergence, see here, there was this was okay, but this particular aspect, there was a divergence and it fell. Bank Nifty fell decently before it started to take support at this particular level at the 50 moving average. So a 50 moving average here also it first gave support, and here also when it came and then when it started to fall at this level it took support. So being a big rally, I think right now unfolding in Bank Nifty as well. I think and also since the up move started in April, there has been only one fall below the 50 moving average, as it happened as because of Nifty. So if at all there is a bigger fall, it could be below the 50 moving average, but otherwise the 50 moving average can give a very reasonable support, and we should expect that 28,800, 28,500 to 600, which is coming right now for Bank Nifty, it can move itself right up to 28,800 levels. I think that it can hold there. And we have seen already the monthly chart also. So please keep this particular see right now you can protect yourself below this particular close. That is the this is 30,840 30,847, right? So 30,847, and this low is 31,000 and 31,100. So I think, and also if you look at the 3-day low, normally that's also usually used by investors. So at 31,000, that is if it is going to fall below 31,000, this one, I think we should be also looking towards some exit. Here also if you see this top, which was around 28,845, and when it just fell down, 28,600 came. So plus or minus 1% can take place. So here just keep in mind this particular level, which is the 28,000, 30,000, 840, 850 levels. So please keep this particular level in mind. And alternately, you can also look at the trend line. Trend line, we are drawing the trend line right now. If particularly this is going to be the high, then in that case, no. So the fall can come, first fall can come up to 29,433, and then a further fall can come if this is breached. So just keep in mind these aspects, particularly a 3-day low, which is coming closer to 31,000. A 2-day low itself is coming at close to 31,000. So normally it is better that you look towards a 2-day low or a 3-day low as an important stop loss to mention. So I think a 3-day low you can keep, because that's proving more effective than a 2-day thing. So you can look at it. And also if you look at the hourly chart also, if you see this particular low, if you see, I think that is holding right now 31,000 10, 15 levels, and it just came up to this particular level also today or yesterday, and it also held support. And right now, this is holding support here itself. I think this 20 moving average. So I think right now the Bank Nifty, I think we should be looking towards keeping this particular low also 31,114. Even this particular low you can keep, because that means a day low will be cut. This particular, suppose if it falls below this particular low, which is 31,005, I think probably we can assume that there is some important top here, because if any particular day is cut, then probably we have to assume that the market is probably looking towards finding its but the close should be below the low. Now here also if you look at it, it cuts, but the close is not below the low of this particular day. So if there is a close which is below this particular low, then in that case that means you are better top and you should make an exit here. Now the overall thing is that markets look quite bullish, but still there is a possibility of a bigger correction, mainly because of the divergences that we see in the chart. A possibility of a pull down right up to 20 moving average and then following that to a 50 moving average is a great possibility. But any drop is a good place to invest, because before the end of this calendar year, a 5-10% fall from this particular level can give more than a 10-15% return before the end of next year. And so it's a buy and dip for investors. And for traders, I think you should ensure that you get out and get in fast, which means right now for Nifty it is 13,750 or 13,800 approximately is the first stop loss for long position, and for Bank Nifty 31,000 is the first stop loss for long position. And the Nifty range probably could be 12,000, 13,250 on the downside to 14,350 first on the upside. Cross below that, above that can probably take it very closer to 14,700 levels. In Bank Nifty, we are expecting a 28,850 to be a very, very strong support if there is a fall. Possibly heading right up to 33,000 this month also is a possibility. So this is the overall nature of the index and its performance, which are likely. We will just look at the Nifty IT sector also. So Nifty IT sector, I think index has given the best return compared to even Nifty. See, last December close was it was this, right? So last December close was 15,652, and this time is 9,000, I think 24,251 minus 14,652 divided by 14,652. So it has given almost, Nifty IT has given even a 65% return. If you look at Nifty IT, no, the return has been fantastic. Last close was December close was 15,652, and now it's 24,251. It has given a 55% return. It has given a 55% return, so it's a mega return as far as IT is concerned. And I think the stock will continue to perform well. IT sector will continue to perform well. And this month has been an extremely good month as far as Nifty IT is concerned. And also we have seen that at least in the case of Nifty, we have seen some drop in cutting below the previous month. Just happened in one particular month here. But here, even when this particular month, when it fell a little bit in August, I think we did not have a fall in IT sector. So IT sector seems to be a much better place to stay invested compared to Nifty or Bank Nifty. And even during the pandemic fall, it took support at the 50 moving average and started to move up, which means excuse me. So there is a greater amount of resilience as far as IT sector is concerned. And it is expected that probably the outperformance can still continue, and hence that it's a much more compelling case for investment even when compared to Nifty. So we have got ETFs there in Nifty IT sector. We have got Nifty Bs, Nifty IT Bs also from Nippon. So you can also buy that, and ICICI Tech is also there. So there are a couple of ETFs which are there for IT sector, or you can go for the stocks like TCS or Infosys or Wipro. But better to go for the Nifty IT sector itself, because it's almost in tandem with what the major stocks in IT sector has done. So looking at the daily basis right now, there has been a slightly today there has been I think it cut the previous day high low 24,176, and it came a little lower, and but there was some rally back. So right now Nifty IT sector can have some small dip, which could be right up to the 20 moving average. So I think unless it comes very close to 20 moving average, I think there is no point of trying to rush in to buy, because that's the best place to start looking at least towards some investment. So I think let's wait for the Nifty IT also to come down a little bit. One big advantage here is that we don't see much of a divergence at all in RSI. So this is the biggest plus point as far as IT sector is concerned. The momentum is much greater intact even when compared to other indices, which means a fall is definitely a dip is to be bought. Unlike in the case of even Nifty, because of the RSI divergence for trading position. I'm saying for investors it is definitely a buy and dips. Traders have to be careful, particularly those who are trading in futures, because the amount of loss can be more. So you need to be a little bit careful. But whereas in the case of IT, I think we could probably see that any correction in Nifty IT probably can hold right up to this particular level and start moving up. And it has not even come closer to the 50 moving average at any point of time in, I think, in the last, if you look at it, I think since March or April, once it started to move above the 50 moving average, it has not even dropped to that extent. So I think right now we should be looking at a very, very sensible place of investment is this particular I itself, because I think if at all there is a fall, it's very doubtful whether it is going to go below 22,619. So right now it's 24,251, and 22,700 is going to be a very strong support. So that itself could mean a slightly bigger fall from 24,251 to 22,619, which is almost at 2,000 points, 1,600 points, which is approximately a 5%, okay, 5% or 6%. So probably that's the maximum. It could be that much. I think we are not very sure whether the fall can be more than that. And so Nifty IT sector is a place where probably we should be looking towards long side of the trade, and we could probably see some more rally also coming in Nifty IT. And really the stop loss will come only for Nifty IT only below this particular 50, because it has not cut the 50 moving average at all till now. So which means that we will be looking at this place. This is assuming this is important this one high. So 21,925. We are not going to see, I don't think so, we are going to see anything much below the 22,000 levels as far as 21,920. So 22,000 I think should be the real big support as far as IT sector is concerned. And we should be heading towards much higher levels as far as Nifty IT is concerned, supported by stocks like TCS and Infosys, because the result season is going to come, and probably that could give some place for us to look towards investment. So if you look at it very briefly, very rarely Nifty IT sector crosses much below the 50 moving average. But even when it comes below the 50 moving average, and if you have invested, then probably the next place of investment definitely is towards the 100 and 200, from where the average works out and takes you to slightly higher levels. So that's what we have seen. There was of course a period of consolidation even in IT sector, but right now the rally has been very good. So any dip I think probably can hold around the first 50 moving average support level. So this is as far as the IT sector is concerned. And the monthly chart, monthly thing has been extremely good, and so we should expect a good amount of support on any fall. Probably this low, the monthly low itself, which is 21,814, we don't see that being cut at any level, because even in the past, ever since 2017, 2018, the last 3 years itself, the number of periods that it has come much below the 1 month moving low itself is quite low. If you see, this one time, this was one occasion, two, and then probably those 3 occasions. Only in 3 months out of 36 months, it started to drop below the previous month low. So based on that, I think we should be we should be going a little easily as far as IT sector is concerned. And definitely looking towards a buy on dips. So we will, as it falls, we will come to know exactly the place for investment to buy. But nevertheless, it should not. There's a very unlikely chance that this month it can go much below 22,620 or so. So because all markets are heated, there's always possibility of some correction. Today, if you look at it, even TCS corrected a little more than what the Nifty IT indicates. Example TCS. Let's look at TCS. TCS has been correcting a little more than the Nifty IT sector. Now, if you see, then TCS has fallen a little this one. And let's look at the TCS return compared to the Nifty IT sector. And last year in December, close was 2161, and right now 2864. It has given 33% return. So the return in the Nifty IT index seems to be much higher than even TCS. That means TCS may have slightly underperformed because of the rally that must have taken place in other stocks, particularly the Wipros, the Infosys, and HCL Tech. Probably would have combined to give a better result. But TCS itself has given very good result, no doubt about it, because with the dividends and other things. But if you look at it, I think the IT performance in terms of the broader index itself has even outclassed, I would say, this one, that is the TCS, which is a bellwether stock. So I think we should be looking more for those who are willing to invest. I think should be looking more towards a broad index itself, which is the Nifty IT. So compared to Nifty, you can even go for Nifty IT sector and make your investment. And second thing is that when the budget is approaching, I think this is one sector which is slightly immune from the general domestic economy. So the budget will not make much of an impact in IT sector. So if there is going to be a fall because of the budget, and if there is a disappointment, then even if other stocks are going to fall, IT will be a very defensive play. So just around the budget time, you can just hold IT sector compared to others doing. But IT sector, the rally can come even in January because of the result season. So probably in the 10-15 days time, we will have results coming out of TCS and Infosys, which probably could provide a big support to these stocks at that point of time, because a lot of good news is expected. So that's the call for the thing. That is, the markets are looking still strong, but possibility of a correction exists because of the divergence in the oscillator. So we are going to look at the oscillators and explanation of oscillators. We are going to look at the price oscillator and volume oscillator on Monday, coming Monday on 4th. And next week around the same time, that is on 8th, that is on Friday, we will also be looking at the time analysis, which we just touched upon last week. Okay. So thanks for participating in today's webinar. So wish you a very, very happy new year, and 2021 is going to be definitely a much, much better year and provide a lot of hope and good things for us to come. Thank you very much. So if you have questions now, please ask. Last year we said Nifty there's a good chance of going up to 13,400, and it has even exceeded that for this December. So we hope that next year also will give us a much good result, and we will look at those projections in coming weeks. Thank you very much. Thank you very much for your participation, and good night and Happy New Year. Thank you very much. Bye.